me welcome Gurmeet Chadda. Hi Gurmeet, a very good afternoon. Firstly, help us with your take on the markets. How do you see the weakness and especially the weakness that we are seeing on the broader markets? Do you believe that we could be in for some more weakness from these levels?
So, if you see, I made this point in our previous interactions. Whenever the bond yield in US surges, whenever the dollar index crosses 107, I think we see, heightened volatility, which again is the case. That's why, the pullback is now getting sold into. I think and more to it is also our own internals. I think, our GDP numbers came lower. If you see the corporate tax collection growth, which the data came, it's just about in high single digit. That's good. That tells you that, even the earnings going forward may not see any meaningful upside. And FIs and near-term money changes growth and momentum, and that's why the money went to US. So I think it's more our internals which is created a little more volatility in the last few days or so. But as I said, a lot of it is also cyclical. So this is not a market to really thump the table and say this is the bottom, and let me go all in. I think, but there are opportunities coming. At some point of time, even some mean reversion will happen from US also. US market cap is now 70% of the world market cap. The GDP is just 26-27% of the world GDP. So some bit of, 70% world market cap to me is unsustainable. At some point of time, the mean reversal will happen, but, markets can remain, irrational for slightly longer. So the best thing to do is, cherry pick what you're liking, where there is good earning support and, enter gradually.
Right. So, Gurmeet, weakness and volatility also throws up its shares of opportunities too. Where within the current market weakness do you think there's good buying opportunity?
As I said, I think financials look very oversold. I think if you see the commentary around, it's been negative now. First it started with the microfinance portfolio. Now, people are talking about weakness in the auto portfolio, especially the commercial vehicle portfolio. There have been news of gold-based lending going up that tells you, which is probably indicative of some stress. And a lot of that is now getting probably, reflected in the price. So I think some of the quality banks may do well, some of the quality NBFCs will do well, but it may take a quarter or so more. So that's one pocket, you can look into. Second, I think there is some opportunity in IT. I think the currency tailwind, any uptick in US, any possible tax cut in corporate tax in US would increase discretionary spending. And here you got to be more selective in terms of not just looking at IT services, but also looking at companies, which are also software IT driven. Let's say, the likes of, let's say, Newgen or Persistent or some of the better names, right? Similarly, you can also look at some of the digital portfolios, the likes of a Zomato or a PB FinTech and some of the more digital names. So I think should be a combination of tech rather than just only IT services. And third, I think a lot of names in energy space, I think have become reasonable post the correction. The energy transmission infra is above $100 billion for next 5, 6, 7 years. So there's a lot of long-term visibility there, especially power transmission. So those are the few pockets, we'll be, are gradually dipping into.
Those are the pocket of opportunities where Gurmeet and his firm is now building on to the strategy related to accumulation. But Kunal, if you can help us with your take on the Nifty Auto Index as well, because there the weakness still persists, and what we are hearing on ground is that all these passenger vehicle companies are now offering such discounts which are even higher than what they offered back in the festive period. That clearly tells that the demand is not that strong yet, as well as they are pushing away the inventory as the year end. But specifically on the passenger vehicle space, Kunal, any stock that you believe that is likely in for some more weakness, or will you also be a buyer here?
No, I'll probably avoid the space as of now, because my belief is that many of these stocks have still started a second phase of a correction for themselves. Now, first broadly on the auto index, there has been a what we call it as a bearish crossover, where the 50 DMA has crossed below the 200 moving average for the Nifty Auto Index. Historically, whenever that has happened and when the Nifty Auto Index has been below both these averages, we've seen the corrections for the auto index extending by a period of at least 1 to 3 months further into the sector as such. That could probably lead to maybe the earlier weaker stocks going into another round of 5% to 10% correction broadly, or there could be a point where many of these other stronger stocks, they could also get back into some bit of profit booking pressure. So I think we need to see what mixture plays out going forward. But my belief is that after such kind of a sharp indication in terms of the bearish crossover, we call it as the death crossover, where the 50 DMA breaks below the 200 moving average, the weakness into these large cap names like Tata Motors, Maruti, etc., and the fact that these stocks are susceptible enough to break below their previous swing lows, even at a point when the markets were doing pretty fair for themselves and at the start of a corrective phase, I think at that point of time, when these stocks have shown signs of weakness, indicates that there is further more room on the downside for these stocks.
Okay, that's the take coming in on autos right now. But specifically, Naresh, to the point that Gurmeet currently was making, that he actually feels that financials perhaps are most oversold. On the charts, though, what's the reading like? Where is it that you sense a bottom in place?
So financials have underperformed ever since COVID. And in the current move, this was the first time we started seeing some bit of an outperformance. And in the last 4 days, that's also taken out. So for now, if we go back to say 50,000 levels, which is where the low was for the last 4 5 months, that remains an important point for the Bank Nifty. Overall, many of the financials either have gone sideways for 3 4 years or have come down sharply. So there is something like a Kotak Bank, which is at the same price where it was pre-COVID. And then you have something like Bandhan Bank, which is at the bottom of COVID. So the whole financial pack from the small to large has underperformed for the last 4 years or the last 4 6 months as well. So yes, going forward, whenever there is a trend change in the markets, financials should lead.
When there's a trend change, then financials should lead. But Gurmeet, help us with your take on the power space overall, because when it comes to the thermal power projects, the wind power, the whole 2024 has been a really exciting year for the whole power space. But going ahead in 2025, and given all these stocks have actually run up quite a bit, what's the outlook for the next year?
So I think there's a lot of run-up which has happened in renewable energy as far as power generation is concerned, and including some of the solar cell module names. I think by some pockets we hold and are fine taking exposure is, let's say, Tata Power. We've added NTPC's corrected from 430 440 levels to now almost 350. That's something we are looking at. We are more gung-ho on the transmission space and mapping the power value chain. So if you see worldwide, there's a huge shortage of transformers. So that is something we like. We also like some niche plays in transformers, especially which are in locomotives, which are a combination of energy and railways. So we have something like a Hind rectifier in the portfolio, which makes both auxiliary as well as traction transformers, one of their core products. We are trying to now, with dips, add into some of the cable wire names with some correction in the market now, and also looking at insulators and few more power ancillaries. I think that there is an opportunity which is very structural and long term. And power, if you see the National Electricity Plan, it talks of huge capex, across the value chain. It almost talks of 8 lakh crores in power transmission alone. So that is something we are liking, and it's just that we haven't seen a correction for a very long time. That's why last 2 3 months, a lot of the investors, 60 70% of them actually come post COVID. Markets are like this. This isn't the last one. So you will see more of it. And 2025 is a tougher year. I think we've had 2 3 years of very easy returns. I think this year is going to test your research and great report.
Okay, that's not a very comfortable note, Gurmeet, to start off a new year with. But what sectors, Gurmeet, do you think will continue to underperform?
I don't think so. As there's any broad theme which you can say can underperform, but I think one space which is looking near term a little wobbly is FMCG. Although valuations have become more and more reasonable, but still they are like 40 50 times. So any uptick in rural recovery before any uptick in urban consumption, and that may happen with the lag, may continue to be particularly in a range. I also think some of the lot of defense and lot of capital goods names where there is a very large run up and they trade at 1800 times. I think they could see if there is some execution risk, we could see some challenge. But broadly, I think it has to be more stock specific. I don't see any one particular sector really outperforming under.
But moving on, and several stocks will be in focus on the back of the FTSE as well as Sensex rejig, which gets adjusted today and is effective from December 23rd. Zomato will replace JSW Steel and M&M to see a weightage cut in the Sensex. Which other stocks will see the highest inclusions and exclusions? Somit joins in with all the details. Somit.
Well, a host of stocks that we need to keep an eye out for on the back of the Sensex and the FTSE rejig. Now, this rejigs will be effective from Monday, that is December 23rd, but flows because of this changes will come in today in the last half an hour of trade. Now, when it comes to Sensex, it's Zomato which is coming in while JSW Steel is moving out. Now, because of Zomato's inclusion in the Sensex, Zomato could see an inflow of close to 512 million US dollars, while JSW could see an outflow of close to 252 million US dollars. Now, because of this Zomato inclusion, M&M's weightage is also coming down in the Sensex, and because of this, there could be an outflow of around 77 million US dollars. Now, because of the FTSE rejig, Bharti Hexacom and Go Digit is getting included in the FTSE index, and because of this, there could be an inflow of close to 19 to 36 million US dollars in these two stocks. But because of weightage increase, ICICI Bank could see an inflow of close to 310 million US dollars. Apart from that, it's Kotak Mahindra Bank which could also see an inflow of close to 118 million US dollars, and Bajaj Finance could see an inflow of close to 66 million US dollars. And when it comes to lower weightage, it's Adani Green and M&M again. Adani Green could see an outflow of 48 million US dollars, and M&M could see an outflow of 38 million US dollars. So in total, M&M could see an outflow of more than 100 million US dollars. That is Sensex and FTSE outflows together combined. The amount would be more than 100 million US dollars for Mahindra and Mahindra.
Okay, that's the FTSE rejig in place and the kind of weightage additions and cuts that one can anticipate. But let's also get in some BTST trades before we move forward. Kunal, what's in your list?
So I'll go with two trades over here in terms of BTST. The first one would be a buy on Aurobindo Pharma. That's a stock which is still looking attractive at levels of 1240 thereabouts. So would look out for targets in the range of 1300. And the second would be a sell on Federal Bank. That's a chart which has shown credible weakness, breaking below the 200 levels today. So you would look out for targets in the range of 190. Stop loss to be kept at 200.
Right, but Naresh, which are your closing trades then?
So first is a buy on Lupin, a defensive bet here, stop loss at 21.45, target price of 2200. Second is sell on Indian Hotels, which has rallied a lot and showing topping out signs, stop loss at 865, target price of 840.
Those are some interesting ideas coming in right now from our experts. Just taking stock of where the market is currently, because it's IT definitely which is weighing heavy on the markets right now. And Gurmeet, it's quite intriguing considering after Accenture's performance and the overnight jump in both Infi as well as Wipro ADRs, one would have imagined a follow through. But IT actually is one of the sectoral laggards today. It's at the bottom of the pack.
Actually, also you have to stretch and see it's been on a good run. If you see, IT's been huge outperformer last 3 months, especially when markets have corrected 10%, and also some bit of valuation. So I think, but it's little surprising it's coming on a day when Accenture has raised guidance. But I think IT should do well. There is a currency tailwind. Already, if you speak to them, the wage inflation thing, which was impacting the margin now is under control. Attrition is reduced significantly. So a lot of things will count other than obviously the order guidance and etc. picking up. Also, a lot of companies you got to watch the bill to cash cycle. How many of the orders are translating into cash flows, and IT most also is a slightly defensive play this time, and most of them have cash in balance sheet. So you could see some corporate actions too, which is buyback as well as any bonus announcement where there are enough reserves and surpluses. So I'm not very negative on it. Just that you got to be selective in terms of where you incrementally put money. If you're going to pay 50, 60 earnings, 50, 60 times earnings there, even there the returns in the near term would be subdued.
All All right, but if we look at the markets then, and on the Nifty 50 index, there are just 4 stocks that are holding on into the green territory, and all these other counters are under real pressure. But the big boy Reliance is also seen to be trading at the day's lowest point. Kunal, if you can help us with your take on Reliance, that where this stock could be likely headed, again retesting those levels of 1200.
Yeah, it's still showing signs of weakness, and I think Reliance has a correlation which is almost 90-95% with respect to the benchmark indices. We've seen that whenever the stock has fallen down, it's taken the Nifty along with it. So I think on the way down, we've seen the stock breaking below crucial supports of 1275, 1280 in the very recent time frame, and from there it's fallen by another 50 to 70 points. And look at the last 4-5 days of the performance on the index. Nifty is also mirrored very similar kind of a price or a percentage drop. I would believe that the charts for Reliance Industries still they don't look very attractive, because the bounce which had happened for Reliance Industries was a lot more shallow as compared to the bounces what we've been seeing in the historical context for the stock price. What we need to wait out for is volume moves for the stock price. So whenever it moves up higher, if the correlation for the stock increases up, if it has a positive effect on the benchmark indices, and then on the other hand, if we see accumulation of volumes, I think only on those patterns is where one should look to start taking contra bet.
Okay, that's the take coming in on some of these, heavyweight laggards. And Gurmeet, to you on Reliance Industries, I mean, what explains this kind of underperformance?
I'm a little surprised, to be honest. I think one thing which probably the market is worried about is again rising debt and reduction in free cash flow, which always happens. Reliance has this cycle of doing capex and then monetizing. I think the new energy business where they continue to do a lot of capex, I think market would want to see some monetization there. So I think that could be the near-term trigger. Second, in my view, there's also been a delay in Geo IPO, which was supposed to come last year. I think so that value unlocking uh, being pending. I think that's the other reason. But I think the retail business, the street believes is not doing as well as some of the other retail businesses. So if you see Avenue Supermart, see some of the other names, they've been very weak, and the impact they want to see of quick commerce with new age platforms like Blinkit, Swiggy, Zepto on Reliance Retail. So I think there are most of factors, but then the key being rising rate and monetization. So I think that happens. I think the first trigger could be Geo IPO or any monetization in the energy business. I think those could be two triggers. But I think the valuations are extremely reasonable at this point of time.
Find Reliance valuations extremely reasonable at this point in time. But yes, indeed, the market movement have been quite sharp today. And look at the move in Torrent Power, if we can pull up the chart of this one, because in the last 15 minutes or so, there's been a knockdown of almost 11%. And the stock has just fallen. I was just looking out for any news flow there, but couldn't find any. But Naresh, if you can help us with the stock levels, seem to be breaking below its crucial supports. But any number that you wish to highlight, any levels there?
So I would wait out and see the next day, because it could be the last 30 minutes, some reject somewhere. But till the time it holds about the 1350 to 1400 mark, the trend still remains okay and sideways.
All right, but on the flip side, if we look at some of these insurance counters, and specifically those government-related companies, stocks like GICRE as well as New India Assurance, they have been doing pretty well. Yes, there is a GST Council meet on 21st, and there are expectations of rate rationalizations expected to be a positive trigger for these companies. But Naresh, if you can help us with your take on GICRE as well as New India Assurance, any stock that still looks attractive, but purely on the technical front?
So New India Assurance could look interesting because that has not done a huge move and has started recovering. So that could be a stock on radar on dips going forward. GIC also, the stock has given a good breakout move today in the last few sessions, but it's already moved up 10-15% in the last couple of sessions. Would wait out for a dip before taking it.
Interesting. Those are some of the ideas. And Gurmeet, it's increasingly seeming like, at least for the lean patch, till we head into earnings, that it's actually only pharma which is going to be the standout performer. Defensive as it may be, and the sector has also been sort of a late mover in the market rally.
Yeah, so you've got to break it up. As I said, I think the branded pharma has done exceedingly well, whether it is
We seem to have
mankind.
snapped that.
Some concern when they did that acquisition. and the stock re
Snapping
but
that line with Gurmeet. Gurmeet, your connection, I think, is getting a little awry. But good to have you on the show as always. We let you go on that note.